Hello traders, welcome to the Advanced Technical Analysis course and the first module, Technical Analysis 101. On this lesson we're going to teach you how to learn how to understand market structure. This is very important and it is in fact the most important thing about technical analysis. But what is market structure, guys? Well, market structure gives us bias to look for trading opportunities. If you don't understand the market structure, we are basically technical analysts that don't understand technical analysis. This is because understanding market structure is at the very core of understanding the way the market moves and how cycles interact with each other. For example, in a bull market, we always look to buy dips. So if we don't understand market structure, we will never understand that we are in a bull market, and maybe we will be looking to buy puts in a bull market, which is a no. And in a bear market, we always look to sell rallies. Okay? In a bear market, you sell into strength, and in a bull market, you buy into weakness. This is how you trade. This is how trade is made simple. You follow the trend, and you buy into weakness, and you sell into strength. But you need to understand what is market structure. Also, market structure gives you market directionality. This is what we already said. In the bull market, price is making higher highs and higher lows. This is the basic market structure of a bull move. And in a bear market, price is making lower highs and lower lows. And this is the basic structure in a bear move. And in between these bull and bear moves, we have cycles that interact with each other. Market cycles are shifts between bull and bear moves. Because remember, guys, that even if we are in a bull move, we are going to have retracements of that move. Because we are making higher highs and higher lows. We need to make a low, so we need to retrace a little bit. And when we retrace a little bit in a bull market or in a bull move, we are going to break with the immediate market structure. But let's have a look at this. In an overall market, in an overall bull market, a retracement would mean a break of the immediate structure for a bear cycle. This doesn't mean that we are going to sell that top and to short right there. No. This means that we are going to wait for the bear cycle to finish for us to be able to buy that dip. And it's the same thing for a bear move. On a correction, we break immediate market structure for a bull cycle. And why are we saying that we break immediate market structure? Well, this is easy, guys, because when we are in a bull market, we are making higher highs and higher lows, and when we retrace, we break with the immediate low. And in a bear market, when we retrace, we break with the immediate high. We are going to go through a chart so you better understand this later on the lesson. Now, the first thing we are going to do is to determine market direction. Are we in a bullish market or a bearish market? So it all depends what time frame you are looking at. If we are looking at a daily chart and price is making higher highs and higher lows, we are in a bull market. But if we look at a retracement of that bull move on a 30-minute chart, we might be in a short-term bear market even though the overall move is bullish. Now, to make this simple, on a higher time frame like the daily or the weekly chart, we might be in a very strong bullish trend or in a very strong bullish move. But if we go to a 30-minute chart or a 50-minute chart even, on a correction of that bull move, we might be looking at an immediate bear market or a short-term bear market. So it depends on what time frame you are trading on what time frame you are analyzing price action on. But perspective is everything here when it comes to market structure. But it is important to know the overall sentiment always, even if we trade the lower time frame. So even if you trade the 50-minute chart and you like to scalp for a 30-40 pip win, you need to understand the overall market structure, because you might be counter trend trading, and if you are counter trend trading, you might want to have tighter stops or take profit faster because you are not trading with the trend, okay? The overall trend. Now, we have sometimes bullish and bearish breakouts, and this is what it all comes out. Understanding market structure is not everything. Whenever market structure breaks, our bias has to change with it. This means that if we are in a bear market, we are going to try and sell rallies or sell into strength. And when we are in a bull market, we are going to try to buy dips or buy into weakness, okay? But when we break with the structure, our bias must change. So if we are in a bearish market and we break with a bearish structure, it'll mean that we are now in a bullish market and we are no longer trying to short the market but to go long. Here's an example. As you can see here, we are making lower highs and lower lows, and we have this trend line that is respected. This would have been a great opportunity to short the market. You can see here that we are in a very bearish move and we retrace back to these levels. When these levels are rejected, we have a very good short opportunity. And well, you can draw a trend line and you can actually think that market structure has shifted, or the bearish structure in this case has been broken because we broke with the trend line. But the exact point where this structure is broken with is when we break with this high. I mean, you know that we broke with these highs, and these highs, but the most important high is right here. Why? Because this is the deepest retracement we got on the bearish move. And when we break with this high, you know that we are now in a bull market and we can continue to buy calls. Like in this case, when we retrace back to this level of support that was tested before, we have a great opportunity to buy calls. Of course, you can buy, or you can go long here on the breakout of the immediate structure. But if you are trading on the longer term, you have to wait for a confirmation that in fact the bearish structure has been broken.